SpaceX just went public, and the whole space market is shifting. Here we break down rockets, missions, and the stocks behind them. Not financial advice, just how I see it. You didn't need to own SpaceX to make money from the biggest IPO in history, but you needed to understand what it changed. SPCX opened the door for retail investors to finally get direct exposure to SpaceX. But the more interesting story is what happened to every other space stock the moment that IPO priced. Before we get into it, quick reminder. Nothing in this video is financial, legal, or tax advice. It's for educational and entertainment purposes only, and I'm not your financial advisor. Always do your own research and talk to a licensed professional before making any investment decisions. Now let's get into it. Let's start with the facts. SpaceX priced its IPO at $135 a share on June 12th and closed its first day up nearly 19%, right around $161. That was just 1 week ago. As of this recording, SPCX is sitting at about $185. That's a 37% gain from the IPO price in under 2 weeks. Market cap around $1.37 trillion at that price. The offering raised approximately $75 billion, making it not just the biggest space IPO ever, but one of the largest capital raises in U.S. history, full stop. To put that in perspective, the entire market cap of the legacy defense industry barely moves that number. SpaceX did it in 1 day. That sent a signal to every investor watching. This sector is no longer speculative science fiction. It's institutional-grade, real money. Quick options check on SPCX as of this recording. We're at about $185 on the stock. Options launched a few days after the IPO and immediately broke records. Over 1.5 million contracts traded on day one, putting SPCX in the same conversation as Tesla and NVIDIA for single-day options volume. Calls are still edging out puts, clearly, and volatility remains elevated given the rapid move from 135 to 185. That tells you traders expect big moves in both directions. In plain English, you're not sneaking into this trade cheaply. Premiums are rich. That's the kind of environment where some traders prefer getting paid to take risk rather than buying far-out calls and hoping for a miracle. Just one example of how some traders think about it, not a recommendation for you to use any particular strategy. So why is SpaceX worth over $1 trillion? Let's look at what the company is actually doing in space right now. Falcon 9 is still the workhorse of the entire global launch industry. SpaceX has been averaging more than 1 launch per week, national security payloads, commercial satellites, and most importantly, Starlink. They've now deployed thousands of satellites and are actively growing coverage across every continent. Starlink is the sleeper story inside the IPO. It's not just internet, it's a recurring subscription revenue machine that happens to be delivered from orbit. As coverage expands and direct-to-cell partnerships deepen, that becomes a very different financial story than just a rocket company.
Dragon is still running crew and cargo missions to the space station. And then there's Starship. Starship is the reason this IPO commanded that valuation. A fully reusable, massive payload rocket designed to take humans to the moon and eventually Mars. NASA's Artemis lunar lander contract is tied to Starship. If and when this vehicle works at full reuse, the economics of space launch change permanently, not just for SpaceX, but for the entire industry. That's the backdrop behind the $1 trillion number. It's not just rockets, it's infrastructure. Here's where it gets interesting for investors. In the weeks leading up to the SpaceX IPO, the entire space sector ran hard. Rocket Lab, AST SpaceMobile, and several ETFs all saw significant interest. Some of that was SpaceX hype bleeding into names that investors could actually trade before SPCX listed. After the IPO priced, you saw a split. SPCX started trading at a premium. Other names saw some rotation. Some money that was parked in proxies moved into the real thing. Now the interesting dynamic is that SpaceX becomes the benchmark. Every space company will be valued relative to what SPCX is doing. If SpaceX re-rates higher, it lifts the whole sector narrative. If it disappoints, it sets a ceiling. And right now, SPCX is at $185, up 37% from its IPO price, so the narrative is very much intact. But here's the part most investors are missing. Just days before the IPO, SpaceX unveiled something called AI1, their first orbital data center satellite. Picture this, a structure 70 meters wide, that's nearly the length of a Boeing 747, floating in orbit, running AI compute entirely off solar power. SpaceX has filed with the FCC to eventually deploy up to 1 million of these. The goal? 1 gigawatt of AI computing power in orbit by 2027, 10 gigawatts by 2028, 100 gigawatts by 2029. For context, that would be more computing power than most countries have today, all running on free solar energy in space. And with SpaceX having merged with xAI, this isn't just a rocket company anymore. Google is already in talks to use the capacity. This changes the valuation math completely. You're not buying a launch company, you're buying the Amazon Web Services of space. That's a very different story. Let's talk about the names you can trade today. Rocket Lab, ticker RKLB, is the most direct small-cap proxy. They've executed on Electron launches, have a defense contract base growing, and are building Neutron, their medium-lift vehicle. Right now, RKLB is trading around $107. That puts the company at about $62 billion in market cap. The 52-week range runs from about $28 at the low all the way up to $151 at the high. Priced for perfection, that doesn't mean it can't go higher, it means the margin for error gets smaller.
Quick options check on RKLB. $107 stock, elevated volatility given the run from the 52-week low. Calls have been slightly more active than puts. Premiums aren't cheap, but they're not unreasonable for this category. Again, just how some traders are framing it, not advice. AST SpaceMobile, ticker ASTS, is trading around $80 right now. Market cap roughly $32 billion. The 52-week range is $36 to $134, so it's pulled back meaningfully from the highs. They're building a direct-to-phone satellite network using BlueBird satellites, massive flat antenna arrays deployed in low orbit that connect directly to your regular smartphone without any special hardware. The upside case is enormous, and so is the risk. Both of these sit in a category I'd call real companies, real technology, real execution risk. Not penny stocks, not sure things. If you're trying to think through space exposure in your own portfolio, not as advice, just as a framework, here are 3 ways people generally approach it. 1. Direct SPCX exposure. If you want SpaceX specifically, SPCX is now the ticker at $185. It's liquid, it has options. The question is valuation and what you're already paying for after a 37% pop from IPO. 2. The picks and shovels basket. RKLB at $107 and ASTS at $80 play supporting roles in the broader space economy. Some people prefer the smaller names because the upside math can look different from a market cap perspective, but so can the downside. 3. ETFs and funds. There are space-focused ETFs that spread the exposure across multiple names. Lower potential upside, but also lower single-stock risk. That's not a recommendation for any of these paths, it's just how the general thinking usually breaks down. SpaceX pulled space investing into the center of the conversation in a way that hasn't happened since the Apollo era. That's the real story. Not just a big IPO, but a sector getting permanent institutional legitimacy. The risks are real. Technology execution, regulatory environments, valuations that already price in a lot of optimism. SPCX at $185 after a $135 IPO is pricing in significant future growth, and the simple fact that rocket companies do things that sometimes don't go as planned. Watch the SPCX price action. Watch whether RKLB holds its $107 level or tests toward the 52-week high of $151. Watch ASTS BlueBird deployments. Those are the signals that will tell you whether the sector narrative holds. One more time, nothing in this video is a recommendation to buy or sell any security or strategy. It's just how I'm thinking about the space sector. You're responsible for your own decisions. If you found this useful, subscribe. We cover rockets, missions, and the markets behind them every week. Drop a comment below. What space stock are you watching?